The McAlvany Weekly Commentary, covering monetary, economic, and geopolitical news events.
How quickly do you go from we're okay, barely, if you're an Italian, French, or German bank, to oops, we're insolvent? Well, do you remember Bear Stearns? Do you remember Lehman Brothers? Monday, we're okay. Thursday, sorry, we're closing our doors. Shocking. It can happen overnight. And I think 2017 brings it to your door because of dollar strength. It's a fascinating time to be an investor.
Now here are Kevin Orrick and David McAlvany.
Welcome to the McAlvany Weekly Commentary. I'm Kevin Orrick along with David McAlvany. The topic of this week, Dave, has to be currency grabs, especially India. We can look at some of the things going on with currencies around the world. Zimbabwe is another one. We saw the loss of that currency completely to inflation. And now Mugabe is monkeying with trying to reintroduce his own notes. So let's talk a little bit about that. One of the key questions right now is, will Modi, who is the head of India, will he now clamp down on gold?
Well, and this is a perfect demonstration of what Reinhardt was talking about when she described creating a captive audience.
Yeah.
We did mention a number of weeks ago that the Indian government had basically taken 500 and 1,000 rupee notes off the market.
Which sound like large notes, but those are what? $7.50, $10 notes, $15 notes?
Right, which are still high value. When you do the exchange and are buying goods in India, things tend to be significantly cheaper there, so those notes go a long way.
Yeah, but did I read this right? Is it over 80% of the currency that's actually circulated that's been taken away?
That's right. So you've got 82% of all cash, which is now out of circulation. And the government basically said, you either deposit it directly into the banks, or, I'm making this date up, by next Tuesday, it's worth nothing.
Right.
And so all of a sudden, people are saying to themselves, well, what do I do? I mean, maybe I didn't pay taxes on that cash. Maybe I did. There's a number of issues which the Modi government was trying to address, bringing the black market into the light of day, but also getting control of cash in the whole financial system.
Little did he know, he almost shut down business completely.
Well, if people don't have cash and they can't access it in the bank that they just deposited in any meaningful numbers, then yes, business activity slows down. So sort of the expectation of annual growth of 7%, it may have been moving along at a nice clip up until this decision, but basically since the U.S. election and since the call-in of cash in India, you've had a collapse in business activity across India.
Well, and something that's interesting, even though we here in the West have the luxury of trying to figure out whether gold is going to go up or down, and you've got guys saying, well, I'll buy futures on gold if it's going to rise, or I'll sell if it's going to fall. That's a luxury. If you were in India, you would be going for gold for a completely different reason. The Indians don't care what gold's going to do tomorrow. They just need it because their cash doesn't work anymore.
So that's got to be one of the most fascinating things to witness is, again, the way our attitude in the West is so different than an attitude someplace else in the world, driven by a very different experience. We're not dealing with existential threat. We're dealing with day in and day out market volatility, which kind of means nothing to us unless we've bet heavily one direction or the other. And then, of course, it might mean something to you, but not at the level of existential threat. When you're dealing with a currency call-in and a limited number of choices and being immediately forced into being a captive audience, is it any surprise that you see the premium on gold to own the physical ounces in that country going up?
Well, the market prices outside of the country have been going down somewhat. Now, I wanted to bring up one other country because we know the inflation in Zimbabwe was the kind of inflation that Germany experienced in the early 1920s. It was the complete destruction of their currency. And so bad money falls apart and people flow to good money. I mean, that's just another way of expressing Gresham's law. So Zimbabwe has been using U.S. dollars as their on-the-street currency now, for years, since their currency blew up.
And we talked about there being a shortage of dollars in a number of places around the world, several countries in Africa, several countries in Asia, and this shortage of dollars is creating a bit of an issue.
Yeah.
Again, just not able to handle daily business activity. So their solution is to offer notes which are in Zim dollars, but there's this benefit. If you're bringing in U.S. dollars, you get to buy those notes at a discount.
Right. Mugabe was giving an extra 5% if you use his notes versus the dollar.
That's right. And it's fascinating because it assumes that there is trust in the Zimbabwe government. It assumes that there is trust in their handling and management of currency and of fixed note obligations, which is such a joke.
Just a reminder for those listening who would like us to answer questions on the next coming week's question and answer program, just send those questions to McAlvany at McAlvany.com. That's spelled McAlvany.com. So McAlvany at McAlvany.com. And talking about trust, Dave, I mean, what we've seen is this populist outcry. Okay, we saw it first with Brexit. Now we've seen it with the election of Trump. Is this like a fascist outcry, or is it actually just another rendering of a lack of trust in the government?
Well, very frequently I'll listen to NPR and listen to sort of liberal news media outlets, and it's fascinating to me. Sometimes the reporting quality is excellent, and sometimes it makes me want to vomit. And, the treatment of sort of the alt-right or, what is viewed as the power structure that put Trump in office.
Right.
It's very interesting to see how the media has treated that.
The mainstream media would make you think it's Nazi.
Well, that's right. So reading through Foreign Affairs this week, there was an article that stood out as particularly insightful on the new wave of populism. Sherry Berman wrote it, and she describes this new populism not as a danger in and of itself. And that's, again, how the left-leaning pundits have painted it. And, I mean, they're talking about it as the scourge of hate, misogyny. It's just a rebranded white nationalism. I mean, that's basically what they're calling it, is some sort of a brand of fascism reborn.
Right.
And Berman's observations were totally different. She was, I think, more generous. And there is a signal, she argues, a signal in the populist movement which suggests something is wrong in our democratic institutions and political parties.
Well, could we go for a definition here? Because we had Pippa Malmgren on about a year ago, and she wrote a book called Signals. Now, it's important to understand, a signal is not a cause. A signal is a signal. It's a way of saying, okay, something's wrong. The signal itself is not causing it, but we need to correct it.
It's an important piece of information.
Exactly.
And if you can pick out that important piece of information, then there's something positive that can be done with it.
You're ahead of the curve.
Yeah, and her advice is listen to the signal, figure out what has become noxious about politicians and political parties, and address those issues. If they're unaddressed, then and only then does populism threaten democracy. And so, again, there's this parallel to the fascist interwar period. And she says, no, this is not it at all. We are not in that interwar period. It's frankly, I've got a signal coming from my hip these days, and it's a pain issue. And the pain is telling me that I, in fact, have an issue. Intriguingly, as I've researched it, it's not a hip issue. It's actually related to my pelvis, sacrum, and lower back. And the cold reality is if I don't address the underlying source, I could do permanent damage to my hip.
But the hip's not the actual cause.
No, the solution is several steps away from the pain, and I need to listen to the signal, and I need to think about it and figure out what the real problem is and address the real problem, because just the signal in my hip, which is the pain I'm experiencing, it's actually not the real issue. And again, I think this is where Sherry is basically saying, look, we're not witnessing a fascist renaissance. That is how the liberal media has sort of caricatured the alt-right and the Trump administration. That's the flavor of the day, if you will. But she's saying that populism is a symptom. It's a symptom of democracy in trouble. And it's not democracy in crisis. But you can end up in crisis if you don't address the underlying issues.
Well, and that's the concern that I have, Dave. I think a lot of people think, well, the Brexit or Trump election, they are addressing the crisis. But actually, we need to see that actually as a signal and continue to analyze. Now, the mainline media, the mainstream media, right now are mainly, they're just defending the establishment. I don't think they're paying attention to the signal. They're basically just saying a lot of people got it wrong and look where you got us.
Right. And I'm trying to think of the best way to present this to my kids. This will be some dinner in the next week where we talk about argumentum ad hominem, the argument or attack against the man. You don't address the issues on the table. You don't discuss in a logical fashion what you have a problem with that someone else has put on the table propositionally. Instead, you just say, this guy is a sleazebag and he can't be trusted. And somehow, if you can undercut character or create an association to something negative, all of a sudden the message is no longer valid.
Yeah, we don't like that guy.
And thus far, the media is not encouraging reflection on the underlying issues. They're creating a reactive tone, a very defensive posture for the establishment. In essence, it's the denial game. You've got establishment politicians who should be reflecting on the surge of Trump popularity as an indication that a ton of people in the flyover states feel like they've been left behind in the new century.
Well, and the flyover states are right now all the red ones.
That's right.
Let's face it.
Yeah, and I'm tempted to think of it in purely economic terms. But the reality is, behind the economic elements, which we tend to talk about more, there is a sociocultural shift and even a spiritual component which ends up driving individuals' motivations. And as you're looking at policymakers, if you're looking at root rot and core issues in the country, you can say, okay, well, it's this person's economic policy or that person. No, actually, there are core motivations of greed and self-interest which have trumped statesmanship. And this has been going on for 30 or 40 years. I know politicians and I know families of politicians who have personally benefited from their family members being in office, and it makes me want to throw up because it's the epitome of corruption.
Yeah, their security is threatened, Dave. I mean, if your security is threatened, you can boil down motivation really almost always to that. And security, of course, the people who are on the government dole, of course they're not going to be happy about the outcome of the election.
Right. So the flyover states, I mean, you've got gains which have accrued to the connected and to those who are conveniently located nearer to the slop troughs. You know, then this is where government doles have prospered some more equally than others.
Reminds you of Orwell, yeah.
Right. Some pigs are more equal than others in sort of the Animal Farm style. Here's the point of protest amongst populists. There's been an unequal distribution of benefits.
Right.
And an unequal distribution of pain, unequal advantage and disproportionate economic pressure. So here's where I think the simplest explanation is often the best. I would say it's a money problem, which today is the same thing as a credit problem.
Well, doesn't it always boil down to that? As we've talked over the last 8 years, Dave, we've looked at tensions rising in various countries around the world, and it almost always boils down to people who are hungry and people who are out of money.
I look at the left and the right in this last election, and their prescriptions were radically different, but their diagnostics were almost the same, and they were missing an element. And you and I talked about this when there was the Occupy Wall Street movement. I thought, gosh, this is an interesting energy. If it was redirected and focused and had some basis in values, this could go a long way towards creating positive change.
They had no underlying solution. You know what it reminded me of? Okay, let's say somebody walks into a kitchen and they're about to cook. You either have a well-ordered kitchen or you just have ingredients all over the place. They had no idea what they wanted out of this. They just wanted to protest.
And what I wanted to say is you are so close to the truth. There is something wrong with the system.
Yeah.
And it is that there is an unequal access to credit.
Well, let me ask you a question then. You said this was a money problem, but these days money is credit.
Well, that's right. We wouldn't be seeing democracy fray if it were not for monetary policies, the past 3 generations of Fed presidents exaggerating the divide between, I mean, again, if we're going to talk about flyover states, it's the city folk and it's the country folk.
Right.
And this was Brexit. The city folk were shocked and amazed that there was anyone other than city folk in all of the UK.
These uneducated people out in the country just don't get it.
Right. But there are varieties of dysfunction. And I mean, you've got all kinds of things that I think the populists would say, I have a problem with this. Political Rolodexes. They get monetized when a politician leaves office, so you finish public service and then monetize your Rolodex. That's not new. But like many other issues, it's becoming more obviously disgraceful as the sums of money involved reach the stratosphere.
Well, and you would think that in a, quote, deflationary environment, Dave, where the price of wheat and barley and these types of grains are about half the price that they were a couple of years ago, you would think the prices would be falling for you and I, but they're really not, are they?
No, I mean, well, 2 things I'd say. The commodities themselves have dropped in price, but the retail prices that people pay for finished goods, services, or the products that are tied to those commodities haven't dropped at all.
I'm not getting a break at all, Dave.
No, a loaf of bread isn't any cheaper, even though wheat is half the price it was a few years ago. Tortillas aren't any cheaper, even though corn is half the price it was a few years ago. And, cattle ranchers are up against it. We've had the price of beef come off, but you don't see that at the grocery store. The sums involved in everything continue to reach for the stars. And that could be a college education or a bag of groceries, because the central bank community prefers inflation. In fact, they target inflation, which if you rolled the clock back 30 or 40 years and talked to a central banker in a different generation, they would have thought that is patently absurd.
That was supposed to be their enemy.
That's right. We have a singular purpose. I read an excellent 15-page interview with Ottmar Issing this last week. And he basically said, look, central banks can maintain political independence as long as they have a singular focus, and that's price stability. If you diverge from a singular focus and move to a double mandate, you've compromised. You cannot be politically independent. And the power of a central bank to do good has to do with being politically independent, which is an implicit way of saying that the central bank community today, perhaps outside of the Bundesbank, has thrown in the towel and is completely politicized.
Well, and without going into too great a detail, Dave, the central bank really sees themselves as the replacement for gold, for sound money. If you go back and actually read the writings of Ben Bernanke, he basically blames gold because it wasn't flexible enough. And so the central banking monetary policy was supposed to be a replacement for gold to still bring some form of monetary stability, which has been the goal for millennia.
That's right. Our sound minds replace your sound money.
Exactly.
And that's the issue that Grant likes to bring up so frequently. We've replaced the gold standard with the PhD standard. And truly, we have 700 PhDs sitting at the Fed telling us the best way academically to slice and dice up the economy and drive growth. And it's just fascinating to me to see the history of the last 8-9 years written. And we're too close to it to have any real honest critique as of yet. But I'll be interested to see how history treats this period.
Strangely, though, we're too far down the track probably to see a vote for sound money. I mean, politicians, how in the world could they deal with some sort of restraint like that?
Well, that's right, because sound money runs in a parallel track with sound public policy, and it naturally presents a limiting function for politicians, having a limited budget to work within. You will never find politicians who will vote for sound money because it limits their ability to operate as politicians in the modern era. They prefer access to unlimited credit. They prefer unlimited spending. They prefer unlimited lawmaking and unlimited displacement of the private sector by the public sector, which does allow for them to funnel funds to personal interests.
Well, and that's not going to change even with the Trump administration.
No. That is, again, the issues which populists are more and more sensitive to. You know, why does he say when we want to drain the swamp? Because people inherently know there's high levels of corruption. It's just very whitewashed. But the only way to figure it out, as Warren Buffett says, you only figure out who's swimming naked when the tide goes out. And in this case, you only figure out who's playing dirty when you drain the swamp. And there is an innate appeal to those flyover states because they feel like, nah, you know, it's not as clean as it's presented. And I think that this is a current problem with democracy, but it's not a new problem with democracy. If you go back to volume 2 of Democracy in America, I think section 4, this is Alexis de Tocqueville, he looks at the frailties of democracy. He writes things that echo and parallel Frederick Bastiat in his book, The Law, that the law can be corrupted. It can serve interests of the few, leading to a concentration of power. And that concentration of power is then sort of prettied up and presented as very good for you in an almost pedantic way. But I'd say if you haven't read Bastiat or de Tocqueville, you must.
Well, do you think we're going to see change in central banking policy then, Dave? We have a real estate speculator in office right now. Now, I'm not trying to take a shot, but real estate speculation does its best work at low interest rates.
Yeah, well, the market reappraisal of sound money and sound public policy may emerge in the context of the next administration, but it's going to be on the heels of a lot of pain. The central bank community, they're maintaining a laser-like focus on disinflation. And yeah, they're going to raise rates in December by 25 basis points. I think that's a given. But they're watching a shift towards government spending, and that'll change the economic background.
That's the fiscal element of the two-sided equation.
Yeah. Now, I think ultimately we see the stock market move in the direction of the bond market. I'll get to that in just a minute. The bond market is leading, and I think stocks will shortly follow on the downside.
But part of draining the swamp was not draining Janet Yellen out of the picture.
No, and eventually you have to have that accommodative Fed step back into the fray to bail out the world from a market sell-off, because we don't know what happens when assets sell off in a world so laden in debt. Trump's conciliatory tone with Janet Yellen, I think, was amazing. After the election, what he basically said For a market practitioner, what he said to me is that you should not expect monetary conservatism from his administration. And that is, going back to your point, that's consistent with his modus operandi as a real estate speculator. Here's the deal. He was the critic of the asset bubble which the Fed created prior to the election. But that's prior to the election. Now it's his bubble. He gets to deal with it, which is why, frankly, I didn't envy either candidate in the election. But now he owns the bubble. What is he going to do with it? He's already told you half the equation. Deficit spending we know about. That's coming. But new rounds of quantitative easing, that's very possible. Very possible. As you go down the track, look at 2017, 2018. We expect Europe and Japan to pass the baton back to us. We are watching global liquidity tighten.
Well, and I think we should talk through that because we did quantitative easing after the financial crisis in 2008. And then after we tapered back our quantitative easing,
they took on
of $2
trillion in liquidity. Sure. So that's what annually is being provided to the market. $2 trillion.
But they're backing away now.
I think they will this next year. And we're seeing a tightening in global liquidity, even if they don't quit putting $2 trillion in, because look, an increase in the U.S. dollar has the equivalent effect of tightening global liquidity. So as the dollar continues to appreciate, you have to see that even though nobody's changing monetary policy, it is tightening liquidity in the global system. So unless there is additional liquidity added, the increase in the dollar is going to be very debilitating to your emerging markets. And I think that ultimately means that asset prices will require intervention in 2017. So going back to Janet Yellen and making sure that she doesn't exit stage left too early, she has to be there and be ready to sort of bail things out. Because here's the reality. If you're going to increase massive amounts of debt, which he's told you he's going to do, the only way that's sustainable is if you lock rates at near zero levels.
Well, let's go back to somebody who increased massive amounts of debt, but he had the ability to do so. There's a comparison right now with the election of Trump and the election of Reagan. What I'd like to do, Dave, is let's walk through the context, because the context is different. Even if the intention seems the same, the context is dramatically different from 1980 to 2016, 2017.
So I think I'm safe in saying that it's different this time, because I'd be saying it not as an excuse for thinking things won't change. That's usually the context in which it's different this time is the kiss of death. But rather it's to say that the context that Donald is working with is dramatically different.
Right.
And I've heard this from a number of people, Jim Grant included. And as a preview, just step back and kind of get a global picture on this. I would say that the legacy and the seeming success of Recep Erdogan in Turkey, for all but the last few years, it had everything to do with getting started as a politician at a secular low in the Turkish economy.
It's all in timing, isn't it?
He came in at the bottom, which made him a very popular president for many years, as the coincidence and timing was credited to him and to his party's policy prescriptions. So the Justice and Development Party, was cheered as the guys who had it going on, when in fact it was more of an accident in terms of just having to come in at the right time. And the Gipper did the same thing.
Yeah, there's a concept when you say, well, it can't get any worse. When somebody comes in and it really can't get any worse, it's going to get better. And that person's going to be known for getting better. Reagan came in on the heels of Carter.
That's right. So the parallel between the Gipper and Erdogan is that they both came in at an opportune time.
Right.
Near the bottom in stocks and near the bottom of the bond market, near the top in unemployment and inflation. So things couldn't have gotten much worse. Reagan began in 81 and inflation was 12%. Unemployment was at 7.2%. The 10-year Treasury was at 12.5%.
Because of the inflation. Yeah.
And public debt at 25.5% of GDP. Public debt was only 25.5% of GDP. And the S&P traded at about 9 times earnings. Contrast that to today. Today, I fear that Trump is coming in at the top of the bond market, the top of the stock market, and at the outer reaches of low inflation. If the pendulum swings both ways, and we've been faced with disinflation and deflation for the last 10 years, when and how far does the pendulum swing the other direction?
And if there is a connection, talking about tops and bottoms, if the bond market was at its very bottom, which means interest rates were at their very top when Reagan took office, it's 35 years. We've had a 35-year period where the market has shifted to where now the bond market is at the top. Interest rates are zero, is about as low as you can go. And so you're right. The only connection between Reagan and Trump monetarily is Reagan came in at the perfect time for the bond market, and Trump is coming in at the worst time for debt.
That's right. Trump is coming in at the end of a 35-year bull market. you've contrasted, as you did with the 80s, yields were in nosebleed areas now, and yields are today almost non-existent.
Right.
Which means that the prices of bonds in the 80s were just bruised and battered.
Well, what
today,
is public debt today relative to GDP? I mean, you said it was 25% when Reagan took office.
Your two measures, if you look at the total number, it's north of 105% of debt to GDP. And many people will say, yes, but the government partially owes part of that debt to itself. And so maybe it's 75% of GDP. Is there a difference between 25 and 75?
But it's 3 times to 4 times relative to GDP. It's either 75% of GDP or 105% of GDP. When Reagan took office, it was 25% of GDP.
That's right. So you've got corporate debt and household debt, which today are multiples higher than in the 80s. And that, of course, is a consequence of rates dropping to zero. And you've got entities which have loaded up. Entities are individuals and corporations which have loaded up on debt because with low rates, from a cash flow standpoint, of course you can have more debt.
Right.
It doesn't matter that your balance sheet is getting heavy on the debt side because from a cash flow standpoint, it's okay because rates are low. And today, guess what? You also have the S&P trading at over 20 times earnings.
So you have the bond market overvalued. The stock market right now, where does it compare to a 1981 stock market?
Right. If the S&P trades at over 20 times earnings and it was 9, it's slightly more overvalued today. Now, that's if you're looking at normal PEs. If you prefer the Shiller PE, you're at 27 times earnings.
Right.
And there's only 2 or 3 times in recorded history that you've had greater overvaluation in the stock market. So Trump is inheriting overvaluation versus undervaluation. And I mean, we're in essence on the other side of the 81-82 step sequence. The bond market turned first in 81 and prices began to rise. The stock market turned second in 1982 and prices have risen in both asset classes since then, barring the shocks of 87, 94, 2001, 2008. And maybe 2017. I guess we'll wait and see. But the bond market should lead stocks. And I think Trump will be the bag holder.
Yeah. Unfortunately, that's what we talked about before the election. Whoever wins is the ultimate bag holder of a situation that existed before they got there.
Unless he can cozy up, and I mean really cozy up to the Fed. And when he starts cozying up to the Fed, and there's another round of quantitative easing in response to a market decline, guess what you have?
Grandma Yellen, bake me some cookies.
That's right. And what are you serving with those cookies? Sour milk if you own dollars, because I think you're looking at the dollar trading down pretty considerably.
If he cozies to the Fed, yeah.
That's right. And until then, we're moving to crisis mode. Why are we moving to crisis mode? Because as we talked about just briefly earlier, the emerging markets are getting crushed as the dollar soars. They're getting pushed to the walls.
We can see the dollar rise and people will look at the gold market and they'll say, oh, well, gold's down $5. And they'll look at the dollar and it's up 50 cents. What they don't understand is these emerging markets have loaded up on debt in dollars at low interest rates, the lowest interest rates that we've ever seen. And now the dollar's rising. They're having to pay it back in higher valued currency.
Right. Well, and they forget that there is 2 parts to the trade that they made. One was borrowing debt at low rates, and that
Right.
might have made sense. But they borrowed at low rates in a foreign currency, and they're not in control of the foreign currency exchange rate. So you've got Asian currencies, which for all the talk of currency manipulation, they reflect lower levels relative to the skyrocketing dollar, far more than they reflect a determined or purposeful devaluation. The Chinese currency is down, as we mentioned. I mean, the scariest places to be a holder of currency today, Malaysia, the Philippines, which is coming up to 50 to 1. My parents are very sensitive to that. And perhaps India, maybe that's the most scary or most threatening. They're nearing 70 to 1, which is an all-time low. And so I'd put that at the front of the list, actually, because not only is the exchange rate threatening all-time lows, but you've got Narendra Modi, as we mentioned earlier, who just took 82% of all cash out of circulation.
Right.
So there's less cash in the system, he says, on his way to a cashless society. And of course, we were wondering, where do Rogoff's ideas take root? The surprise is that it's 2 places, and they happen to be at the sort of polar opposites if you're talking about developmental extremes. India on the one hand, Sweden on the other. The Riksbank is looking at implementation of an e-krona, and India is following the prescription from Rogoff's book, The Curse of Cash, to reduce currency in circulation as a precursor to elimination altogether.
Yeah, but there's a difference between Sweden and India. I mean, you and I both know it. In Sweden, they basically trust their government. In India, they don't.
Right. And it's weird and interesting place here in the U.S. because I think the U.S. election said 50% of the populace really doesn't trust their government for a variety of reasons. And so there's that populist appeal, throw the rascals out. But 50% are more than comfortable trusting their government, thinking that they not only have the best interest, but the best strategy was already in play. And so it's interesting. One of the great bear markets of my lifetime has been in privacy. Privacy is in its own version of a bear market in the West, in part because trust abounds between the citizen and the state to a large degree. And again, maybe that's diminishing, but it's still at least 50% have trust in the state. And so really privacy, who needs it? Who needs it if you have trust in your government?
Well, look at the generation below us, Dave, who are on Facebook and putting just about everything personal. They don't see, they may not be trusting their government, but they're trusting the people who hold Facebook, and the people who are reading Facebook and the internet in general. So there has been a change.
That generation still feels weird about Google using facial recognition technology to be able to match up photos that they've put up and name them publicly in other places and be able to advertise with them individually and personalize that advertising because of their facial recognition software. Even that generation says, that's a little bit weird.
It might be a little bit late, too.
Yeah. Well, I think we look at India, and it's going to be interesting to watch the Indian government navigate their own version of a challenge to privacy.
Yeah.
That's what they've initiated there in India. Because, look, trust is non-existent.
Right.
And that trust deficiency has defined one of the critical motivations for private holding of gold in that culture for generations, at least one of them. I think there's a cultural aspect to the love trade, as some people have called it. But I think a big one, judging by the premiums on the gold price today in India, is this issue of trust. There's been the scuttlebutt about Modi halting gold imports altogether, which is currently running around 700 tons per year. And in the West, we say, well, then you should short gold. It's going to be dropping $100 to $200 per ounce because it's a supply-demand issue, and you've just eliminated 700 tons of gold. And again, that's an armchair critique. It's not a clear understanding of what's driving the motivation of the purchaser on the other side. There is a psychological component, there is a sociological component, and there is a political component where the person doesn't trust the government and doesn't trust the government's money.
Well, we have a historical component because they did this a few years ago, Dave, and it didn't change the amount of flow into India. People just brought it in. You're going to own it one way or another. It's either going to be black market or not.
That's right. So we doubt that that is going to happen. We doubt that there will be, an elimination of imports.
But if it does happen, Dave, do you think there's some sort of way a person could profit from that?
I think the easiest trade, if 2017 sees India stop the official import of 700 tons of gold, the easiest business opportunity, if you wanted to make 1,000% on your money, this is a no-brainer. Mule trains through Pakistan.
Oh, so you just basically buy a pack animal in Pakistan.
Renting beasts of burden to accommodate market demand for precious metals, because 700 tons is still going to find its way into India, officially or unofficially.
Right.
And this is the madness of Rogoff. Rogoff and Modi presume too much about the compliance of people when survival is on the line.
Right.
You've got traders in the first world who have sold gold in expectations of restricted imports into India. And Indians themselves have bid up the price and are willing to pay higher premiums due to the currency tinkering and the possible threat of limited access to precious metals. And by the way, the already limited access to the funds which they were forced to put into the banks.
Right.
Put all of your money in the bank before it's worthless. By the way, you can only take out a pittance on a daily basis.
That's the difference between a speculator who's got the luxury of being able to do that from the outside and a person who's literally just trying to survive.
That's right. That's right. So traders in the U.S. are now more bearish on gold than they were at the December 3rd lows when it priced out at $1,046.
So it's lower right now. There are more bears on gold than there were a year ago when gold was below $1,050.
And another way of saying that is that the bullish crowd has diminished to just a few people left.
You're one of them. Yeah, I think you're still bullish, aren't you, Dave?
I love it when gold gets
You're an
cheaper.
idiot. You're crazy. Just like
be.
your dad and just like me.
I may be. We may be. And so, there is this issue. Sentiment runs to the extremes before it reverses.
Right.
And daily sentiment for silver reached a high of 97%. Stephen Hochberg follows these things very well. 97% bullish. And that was late June, early July of this year. 97% bullish means there's like 3% left. Imagine 100 people in a room. When you run out of buyers and the last person is bought, you don't have any more buyers.
That probably would have been a good day to maybe sell some silver contracts.
On a short-term basis, absolutely. So it signaled a correction. Well, that number sits at 6% today, 6% bullish.
Okay, so 100 people in the room. 6 people raise their hand when somebody says, are you still buying silver?
94 people have said, I just sold mine. You're the idiot still holding. And again, you run out of sellers, and guess what the market does?
Right. It reverses.
Right. So actually, silver, this daily sentiment index, is more bearish for gold and silver today than it was in December. The December lows for silver were 10% bullish versus 6% today. And silver, of course, was trading at like 1350, 1370, somewhere in between. And how do we translate this? There's a major rally, which is immediately around the corner.
Yeah, all joking aside, when you have those numbers at such extremes, you always have a reversal.
Always, except this time.
Right. This time it's different.
Is there the possibility? There's always the possibility that something crazy happens. But I think, yes, the majority of the time it begins to soar off of those levels or fall off of those levels between extreme bullish and no bulls at all.
Okay. So we've talked about the metals, but I want to go back to this emerging market thing just for a moment, because the level of pain that could be caused, let's say you're in Turkey right now.
Oh, this is why 2017 is one of the most fascinating years to step in. I mean, not only do we have a new administration in the United States, with every leader in the free world shaking in their boots because they're not sure of what the implications are.
Including Erdogan.
Well, sure. What does this mean for anyone on the planet? And as the dollar continues to go higher, if we go back to Erdogan for a moment, 2 things stand out in terms of the European economic and currency stability, because what happens in Turkey doesn't stay in Turkey. What happens in Turkey has a direct impact on Europe and on the world. And just as we looked at and talked about the rise in the dollar, it has forced up the cost of repaying dollar-denominated debt. Yes, that's true in Asian countries. But there is about a $270 billion with a B, exposure to Turkish debt. That's concentrated in European banks. And that debt is dollar denominated.
Okay, so that's just in European banks, $270 billion. That's huge. But the total debt exposure is actually quite a bit larger in dollars, is it not?
Well, that's right. And I love Napier's research. Russell Napier, he's going to join us again on a commentary in January, I believe. And, one of the things that he's pointed out recently is this is the killer. This is the killer. You've got folks who've got this huge stock of debt, and it's not in local currency terms. It's in foreign currency terms.
Right.
And to the degree that you see appreciation in the denominated currency of that debt or devaluation in the currency, the home currency, which has to pay back the money, it's like testing your flexibility. I can tell you, I cannot do the splits, but the Turks are getting ready to practice the splits. And this is what it looks like. $400 billion in debt has essentially become, since the election, $476 billion effectively because of the currency exchange differential.
$76 billion is a lot of money in the United States, but in Turkey, it's almost devastating.
So a 19% change in the currency effectively raises the burden of debt by that amount. 400 billion becomes 476 billion. At what point does Erdogan say, sorry, can't do this? It's too much a burden to bear.
Right.
And this is why I say 2017 is going to be absolutely fascinating, because as we march towards a higher dollar, oh, sure, there's the knee-jerk response and gold sells off. That'll fix itself halfway through 2017. And I think you'll see significantly higher gold prices, because as you may recall from the 1970s, there is not always a connection between the move in the dollar and the move in gold. The dollar declined, and by 76 stabilized and didn't go down anymore. And that did not put an end to a bull market in gold. In fact, the dollar stabilized and gold then more than doubled in price after the dollar stabilized. My point is this. We are in the midst of triggering the kinds of financial crises which upended the world in 1998. Malaysia was the last significant currency collapse where, to stop the bleeding, they brought in capital controls.
Right.
To stop the bleeding, they shut down all payments of debt.
It was called the Asian contagion, and it was started by the same type of thing we're talking now.
Oh, that's right.
It started by a rally in the currency that the debt was denominated in.
That's right. So a dollar strength theme is one of the things that ends up undoing the global economy. And quite frankly, when you go back to this 400 billion, now effectively 476 billion in Turkish debt that's owed, 270 billion of that is in banks, with the majority of the 270 billion being in European banks. A default or an announcement from Erdogan that says, we're done, we're not paying, is a day of insolvency. And how quickly do you go from we're okay, barely, if you're an Italian, French, or German bank, to oops, we're insolvent? Well, do you remember Bear Stearns? Do you remember Lehman Brothers? Monday, we're okay. Thursday, sorry, we're closing our doors. Shocking. It can happen overnight. And I think 2017 brings it to your door because of dollar strength. It's a fascinating time to be an investor.
You've been listening to the McAlvany Weekly Commentary. I'm Kevin Orrick, along with David McAlvany. If you have questions that you want us to answer over the next few weeks on the question and answer program, send those to McAlvany at McAlvany.com. That's spelled McAlvany.com. Or you can call us at 800-525-9556.
This has been the McAlvany Weekly Commentary. The views expressed should not be considered to be a solicitation or a recommendation for your investment portfolio. You should consult a professional financial advisor to assess your suitability for risk and investment. Join us again next week for a new edition of the McAlvany Weekly Commentary.